Joining me for a closer look at what's playing itself out in that market scene is Patrice Rassou from Ashburton Investments. Patrice, thank you for your time and a good afternoon to you.
Good afternoon, Alithanda, and to all your viewers.
Keen, maybe to first start off by reflecting on markets and the screens we're seeing today. Upbeat in Europe, a little bit choppier here at home, and of course we expect that.
Yeah, our market's really a bit hesitant, I would say. The all share has been down 2.2% over the last week with the election results, and the mid caps were under pressure, down 4%. Also, bear in mind that we've seen a bit of a bloodbath in the resources sector. Resources were down 6% over the week. The copper price down 5%. So that's weighed down on sentiment, but I think market is really waiting for more certainty in terms of where we go going forward in terms of constitution of the government. You see that a little bit in the rand, which was weaker, 2.5% for the week. Interestingly enough, our bonds were flat. So bond market not too worried about the outcome of the elections and how it's going to go going forward. So there's some minuses and some pluses, but I would say now more steady than it was a few days ago, and looking forward to announcement as to who's going to constitute government and who the parties will be, which will go in bed with the ANC.
Of course, the rand, I think, reflecting very similar sentiment.
Yeah, the rand had weakened initially, has a little bit stronger foot, but bouncing around, as I said, 2.5% weaker. Half of the weakness is really a stronger dollar. So it's not just us. I think emerging market currencies have seen some weakness over the last week. And look, elections have got a big impact, whether on equity markets, currencies. If you look at India, as soon as the counting started and it looked like the BJP wouldn't get the type of majority that was expected, the Sensex, which is the Indian stock market, lost 5%. So I think you have to expect these knee-jerk reactions while investors are trying to understand about what economic policy is going to look like going forward.
And then I'm also keen just to get your thoughts on markets possibly or not even reacting to that GDP print yesterday. It was disappointing, but I'm wondering if there was any room for that to take center stage.
Yeah, we saw some weakness during the course of the day. Market did close on the back foot yesterday, the all share. I think it's a contributing factor, but I wouldn't say it's the main contributing factor. I think we're still in election mode and digesting of results. I think that's a bigger factor. And the other one is, as I mentioned, I think if you look at the resources sector, that's been very volatile for us. I think looking for some direction in terms of resources, and China is key here. I think commodity market is probably more important in terms of the direction of markets than the SA GDP number.
And then let's talk about the ECB. I think that's an important one to touch on at this point. Of course, that decision out tomorrow, but it looks like markets are pricing in the fact that that will be a cut of sorts. How does SA Inc. or South Africa or our local market, Patrice, try to take stock of the fact that the ECB will cut sooner than the Fed? Is that meant to affect emerging markets and South Africa at all?
That's a very good question. I think firstly, I think the global inflationary picture is important. I think the ECB CPI number is expected to be around the 2.6% mark. We've seen 8 months of inflation coming down below 3% in the ECB. I think a disinflationary picture is important. As you would know, the US picture has taken a bit longer than expected to get back to the target. So when you see a major central bank like the ECB planning to cut rates, even though it's a quarter of a percentage point, I think it's good news in terms of an environment which is less constrained. And when you see rate cuts by the global central banks, it tends to signal that we at the bottom of the recession. And then we can get some flow starting to return into emerging markets. So I think it's been a very constrained environment. Emerging markets have been under pressure. I think markets, because they are forward-looking, when rate cuts start, the markets start to look a year ahead and say, well, we close to the bottom, there's rate cuts, maybe emerging markets will start to recover from there.
I also want to
And
attach.
it gives
Yes,
room,
yes.
sorry, one more.
Yeah, please
It
go
gives
ahead.
room for our own Reserve Bank to cut
Yes.
also.
That's really what we want to see, Patrice, more than anything.
Yeah.
China also services activity growing there more than expected in the month of May. And let's talk about China there. Of course, at some point, I think we got a China data fatigue, Patrice, watching this data unevenly showing up for us. Where are we now with China's big recovery story?
Yeah, good point. I mean, end of last year, there was the reopening effect. It was expected that Chinese demand, especially for our commodities, would be very strong. We had a bit of a spurt, and then the property market collapse happened. I think there was a lot of concern because construction, residential sector is a big area of demand for our commodities. That went backwards, and the markets also were concerned that the Chinese government was not doing a lot to stimulate the economy. I think at this point in time, we're seeing some positive data out of China, some recovery, and I think the government itself has realized that they need to do a little bit more to stimulate the economy. So that's starting to show up in our commodity prices and on the JSE from the resources sector also.
And Patrice, oil. I'm not complaining about the $77 a barrel we're seeing, but it does tell us that all the attempts by the OPEC countries to cut production to have that price kind of pinned above 80, not quite working.
No, not quite working. We are seeing supply coming on board. I think again, if you go back over a year, there were a lot of concerns that the Ukraine-Russia war would cause, a pinch point in the supply. That's not quite been the case. Again, there have been some back channels where Russian oil has found its way through surrounding countries into the likes of China and India. So the supply is there, is not as constrained as it is, and you do find the price under pressure.
And with that said, we don't have many company news coming out today. Maybe 91, the big one. Patrice, keen to get your thoughts here. We are seeing assets under management declining 3% there. Profits after tax were also reasonably flat. I think all of it, reflective of just volatile market conditions.
Yeah, I mean, their operating profits down 8%, which is not a bad result. I mean, if you look at the AUM, you already mentioned the assets and management only down 3%, but the outflows are big. I mean, it's 9.4 billion pounds. I mean, if you multiply that, that's almost 200 billion rand. So I think the outflows are still there. I think markets globally or investors globally are still very cautious, and 91 are experiencing the impact of that.
With that said, Patrice, I'm keen to get your stock pick, but first I'd like us to take a look at counters that have found favor with your peers.
So I'm choosing a sporting goods company, and it's the third biggest sporting goods company in the world. Number 1 is Nike, number 2 is Adidas, number 3 is Anta Sports. And people might have heard of Nike or Adidas, but I'm guessing a lot of South Africans haven't heard of Anta Sports, and that's because it's a Chinese sports apparel retailer, sneakers and clothing and all of that. They also own a company called Amer Sports, which listed in New York earlier this year. And that owns brands like Wilson. So if you think of some basketballs with the logo Wilson on. And basically, they're exposed to the Chinese consumer and a few Western consumer markets as well. And we've seen the Chinese economy be under pressure, Chinese consumers be under pressure. And I'm hoping that that's sort of coming to an end.
I'll go with a staple, Reckitt Benckiser. The company is trading at a significant discount to the historic multiples, but more importantly, it's trading at a discount relative to peers. But it has done relatively well. I mean, I think, save for the nutrition division, so they've got the brands called Enfamil, which is the baby foods. That division struggled with volumes there, but in the other divisions where you have healthcare, they've got Nurofen, Gaviscon, those type of products, and then in the other segment, they've got the Detols. That's actually quite a resilient business, and we've seen that as inflation comes down, the volumes have picked up to some extent in the other two divisions. The nutrition division is still struggling, but I think overall, I mean, it's quite a good business trading at a big discount.
All right, Patrice, and to sports, a record to Benkisa. Keen to get your thoughts on these counters.
Yeah, I think in terms of our thoughts, I think right now the big opportunity that we're seeing is in Chinese tech. You've all spoken about the Magnificent Seven, the big internet companies in the US and how well they've done. And really the Chinese software services sector, internet sector has lagged. We know we can get exposure to Tencent, which delivered very strong results through Naspers and Process. I think that's one of the picks we like. But for those wanting something more racy, I will go for PDD Holdings. Everyone has heard of Temu. I'm sure yourself, you might have ordered some items. So very strong retail growth there and margins and really taking over the world. We've seen the adverts everywhere. So that would be my pick for today.
Wonderful, Patrice. Thank you so much for your time this afternoon. It's been a pleasure hearing from you. That was your Midday Markets Update with Ashburton's Patrice Rassou.